Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here on Share Talk for Sunday, the 11th of October. Starting off with Asimilar, which seems to have finally got its act together after a rather nasty return from suspension the other month, a couple of months back. We got a break of neckline resistance there at 25 pence. So we broke, we already flagged the break of the resistance line from September around the 24 pence level, so that was good as well. And the view at this stage is that while we're above the 20-day line, say 24 pence, we should head up towards the top of that rising trend channel from September, heading up to 35 pence, hopefully as soon as the end of this month. Related stock in terms of the family of Asimilar, etc., is All Active Asset Capital, a stock which, although people have been looking at the likes of Novocyte and Eurasia Mining, this has actually been quite a winner as well. Here the shares were first covered here around the quarter of a penny level back, I suppose, in March or something like that, and done rather well so far. Looks as though we're in for a new leg to the upside, just breaking that near-term triangle there from the beginning of last month. And really above, I suppose, the 7 pence level, the 20-day moving average. We're looking for further gains. Difficult to work out exactly what the target should be here, but it looks as though the best fit is a March resistance line projection currently heading up towards 14 pence. So above 7 up to 14. At this stage, only really back below the 50-day line, 6.25 really delaying or upsetting the bull argument. On to the next situation, which is one that is a requested stock, Deep Matter. It's been hanging around for quite a while now, this particular situation, but we did have just the hint last week of a break of that line of resistance from the end of August. I suppose that's around the 1.5 pence level, so we've been trading either side of that. I think ideally one would want to see an end-of-day close above the intraday highs of Wednesday and Thursday last week, so above 1.8 pence, ready to at least then deliver the prospect of a retest of post-May resistance around 2.6 pence. If you are a fan of the shares and looking for the overall big picture, maybe a 2 to 3 month view, at least while we hold above the floor of the triangle from April around the 1.4 pence level, looking for an eventual move up towards 4.5 or 5 pence, assuming that I've got my triangle there from April correctly configured. But at least in the near term, 2.5 pence could be a viable target. Stock which I covered recently, but then I suppose it fell back a little bit, E-Therapeutics. I think that the break was that line, that resistance line there from the end of May, so around 14.5 pence. We rallied a little bit and then came back to retest the 50-day line, which has been done 2 days in a row last week. The view is still there, I suppose, now that while we're above 14 pence, looking for further upside and hopefully up towards the top of that trend channel from May, as high as 27 pence on a 1 to 2 month time frame. The obvious thing to do if you're cautious, though, is to wait for an end-of-day close through 16.75 pence, the initial August resistance, before calling the shares up to 27 pence. It seems that if you're looking at Twitter, you can't get away from Gene Drive. I think every other tweet seems to be about Gene Drive, sort of Gene Drive mania at the moment. I think the current situation, the best way to describe the current situation is that we've had the retest or test of the 50-day moving average and that sort of bear trap below it down to 91 pence at the end of last month, and broke neckline resistance around £1.13 this month, and so obviously above that, then looking for further upside. Retest of £1.50 is the obvious place to go here. That could be accelerated on a break of that May resistance line at £1.30. So an end of day close above 130, leading to 150 plus that resistance line there from July, currently pointing at around 160 to 170. So while we're above the 20-day line at 121, looking for up to 170 on Gene Drive. Next up is another requested stock, and here one which is relatively obscure, immunodiagnostic systems. Not easy for me to say apparently at the moment. broken neckline resistance there at £2.50, which was late August resistance and the peak in September. But the overall view here is that while we're above the 50-day line at £2.34, looking for a top of June triangle target as high as £3.80 over the next 1 to 2 months. Obviously a very liquid stock and rather fiddly one to call, but at least above the 50-day line, looking for further progress to £3 plus at least. Jubilee Metals, one of my favourite stocks in terms of being on, well, it's basically on a fundamental basis rather than a technical basis. Here we've had multiple support points for the shares above 5p since the latter part of August, and above 5p looking for a meeting with that May resistance line projection currently pointing as high as 8.5p, and that's a target that could hopefully be hit as soon as the end of next month. So above 5, looking for 8p plus on Jubilee Metals. Another stock where a lot of well wishes for this particular situation, Mossman Oil and Gas. If the stock comes through there, interesting at the moment in the sense that there's been good solid support for the shares with green candles, consecutive green candles, 4 in a row there last week. 200-day line at 0.14, and really while we're above that, looking for a 1 to 2 month target as high as the top of the rising trend channel from March at 0.35p. Early end of day close back, or weekly close back below the August support to date at 0.13, really delaying the upside scenario on Mossman Oil and Gas. One of the winners of late, which looks as though it's going to keep on going, is Ormond Mining. Here a very strong looking near-term breakout for the shares, breaking through the 200-day moving average at the 50-day moving average and 200-day moving averages at 0.75, and a nice close, the highest close of the year for the shares, above a penny. The view at this stage is that at least while we're above the August peak at 0.95, looking for a February resistance line projection target as high as 1.7p as soon as the end of next month. Rising trend channel there from the beginning of the year, and breaking the 200-day line looks as though that's enough of a decent signal for Ormond. Notice that shares of Supply at Me Capital were actually rising last week, or consolidating healthily last week, even without any news, which I think is the first time they've done that of late. Overall pattern here still bullish, despite what the bears are saying. We had resistance then in April at 0.4p, tested that as new support at the end of last month, and also support at the 50-day line on several sessions there in a row. So that's looking healthy too. And the triangle formation since the early part of August just needs to be broken at 0.55. An end of day close through 0.55 could set up the shares for a move up to 1.2p as soon as the end of next month. And obviously the stop loss there back below the 0.4p level. So a much more stable looking position at Supply at Me Capital at the moment. Another stock where you can see the bulls willing the shares higher, which so far hasn't, well, it's worked a little bit, but hopefully they're looking for, we'll get some more over the next week or so. Lots of probing for support for the shares around the 0.15p level. End of last week, though, breaking that August resistance line at 0.16, and a nice close on Friday as well. So above 0.15, looking for the top of the broadening triangle I've drawn from the early part of June, as high as 0.28 or 0.29p, hopefully by the end of next month. So reasonably obvious stop loss area, and reasonably obvious resistance target as well for the shares. Finishing off with a stock which I haven't covered for quite a while, largely because it hasn't moved, but Friday saw VR education going through the roof, breaking a line of resistance from June at 15p, and hopefully heading up towards the top of the rising trend channel from March up to 30p plus. So let's see if that works out. Early and end of day close at this stage back below 15p, really delaying the upside scenario for VR education. That's it for me today. More updates on Monday, tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.